Hey everybody, and welcome to another episode of Time, Talent, Treasure Radio. I'm your host, Jared Sebest of Taegis Financial Group, where we build purposeful retirement plans. At Taegis Financial Group, we believe retirement planning is so much more than just preparing financially. Our goal is to help retirees and pre-retirees steward their time, talent, and treasure. We have the tools and proven process to make sure your retirement plan delivers the greatest purpose, impact, and legacy. If you need help building a purposeful retirement plan specific for your life and your retirement, give us a call. Our number is 320-222-4236. You can request a meeting online at taegisfinancial.com. And if you're in the neighborhood, our office is located on 19th Avenue Southwest in Wilmer, building purposeful retirement plans. Well, thanks so much for joining us today. Just a little reminder, again, the process by which we get to know people is kind of that first initial meeting. That's why we're always encouraging people to request a meeting. That's kind of where the relationship starts. And it's always no cost, no obligation. And lots of times that initial meeting is really just kind of getting to know you. It's a chance for you to get to know us and to make sure that this is a win-win relationship for both you and us. So again, I will always encourage you to reach out and just get that conversation going. Whether you are working with a retirement planner currently, whether you just need a second opinion, whether you need to get started, regardless, that's where we always start. Again, thanks for joining us today. If you missed last week's show, Ben Taegis and I talked about this idea of, wasn't there supposed to be a recession? There's an article on our website, taegisfinancial.com right now, but we talked about that in detail last week, and all the hubbub, it seemed like earlier this year and especially last year, was recession. If you thought 2022 was bad, wait till 2023. There's going to be lots of volatility. We're going to be heading into recession. That was kind of the narrative and the speak, certainly earlier this year, and things really haven't panned out that way in a number of ways, some good, some bad, and we talk about that extensively. If you missed last week's show, there's a number of ways that you can find us. First, go to our website, again, taegisfinancial.com. We've got all the radio shows archived on there. And also, if you're into podcasting and you're already on iTunes, search Time, Talent, Treasure Radio on iTunes. You're going to find this particular show logged every single week on iTunes. So if you're a podcast listener and want to get your media there, that's another great way to do it. Well, joining us on the show here today is Tim Mattern, and we are just going to talk about some of the things that you've been seeing, hearing, some of the concepts that, or at least ideas that have been coming up in your meetings, and maybe talk a little bit more about, last week's show where this whole talk of recession, that was kind of my observation over the last year, was just like everybody was talking about how bad this year was going to be, and it hasn't panned out that way. What's been your perspective or idea on that? Yeah,
it's been fascinating to see this kind of come to fruition. This year has been, I would say, better than what we anticipated right away. Just ironically, today, Goldman Sachs came out and revised their probability of a recession in next year from 25% down to 20%. So we're seeing these major banks revising how much of a recession we could have, or the probability. And we've seen a lot of, we're in what we call earnings season right now. We're seeing a lot of banks and a lot of companies earnings be a lot better than what we first anticipated. So it's a unique situation right now where the year has actually done a lot better than we thought and anticipated. And I'm not going to try to guess what the second half of the year is going to be, but there seems to be a lot more optimism in the market than there was 6 months ago, and for sure 12 months ago.
I don't want to push you on the spot, but what would be your, why? What has been happening in a very general, layman's speak here? What's been happening that has been turning out to be kind of a good thing for investors?
I think what we're seeing is what the Fed did last year, and increasing interest rates has worked, meaning that inflation has come down. We saw the latest numbers come in just shy of 3%. So I think that has proven to be a comfortable position for the market. And they've seen that. They're recognizing what the Fed has done has worked. I think they will pause rates for a little bit. We might see another hike here or there, but for the most part, it should be done to see how much impact do these rate hikes have, and let it kind of marinate here for the next few months.
We were prepping for the show here today, and we were talking about how inflation rates have certainly slowed down in the last year, and kind of the latest numbers that have come out, which again was generally a good thing. But you said maybe an offset point to that is that demand is starting to go down as well. So like, is it kind of, there's some bad with the good? How would you explain that?
Exactly. Like you just said, yes, there is some bad with the good. So I look at that, and I think a lot in my meetings, people see the recession or see inflation numbers coming down and they're optimistic. And I'm like, well, the reality is it's like demand is slowing. So what could that mean?
Right.
I don't know. But I think it's just a unique point for us to, again, work with our clients and say, hey, I don't think it's all going to be just rainbows and roses here. Mm-hmm. Like there is still things that we need to watch. Let's not get complacent. Let's make sure that we're still looking at your plan. Let's make sure we're still looking at investments, because I think it's a tricky time right now. So I just don't want to put our guard down and say, hey, everything's going great. Like, look at the year we had. Yes, it's been nice. However, I don't know what that's going to mean, in the long run.
It always seems like whenever we're supposed to have a bad year, and a lot of times there's volatility and there's always something good and bad. There's always a two sides to every coin. But it just seems like if you just kind of think in terms of long-term approach, don't get caught up in the news cycles. Don't get caught up in fear. Don't let fear dominate your mind space, and certainly not your decisions.
For sure.
It just seems like that seems to be the way and kind of the rule of thumb in these types of scenarios.
You have to have your mindset. I think that's what we as advisors are trained to do. And that's what we need to do, is talk to our clients and let them know we've been through this before. They've experienced this before. And it's ironic, as much as we see that things are going good, and we just mentioned this earlier, what are they talking about now? The elections for next year.
Yeah, which
it's like they're already jumping to like, okay, well, what's the next bad piece that might happen or could happen? It's like, yes, that's going to play a part in it, as it always does. Increased volatility. There's a lot of uncertainty, which the market doesn't like. Again, if you're really looking at your long-term plan and the funds that we have you in, like, they perform well over the long haul, and you just kind of got to go through those brick walls, so to speak, and be like, your plan is, we have it set up for a reason, and you'll be just fine.
You had said that some of your clients are already asking about the election. I go, it's not even an election year, and you said no, next year. Like, they're already, but again, this helps prove the point. Or let's maybe play out like worst case scenario. Let's say the elections go wonky and whatever. What difference would it make today in your decisions, even if worst case scenario were to play out? Again, do you find yourself kind of talking through those psychological situations?
For sure. Those conversations come up in the meetings quite a bit. And it's ironic you bring that up, because a lot of times they'll try to start, hey, what decisions should we make? I'm like, well, we don't even know what's going to happen. And if we're going to start making adjustments to the portfolio based on something that could happen, like, I don't think that's a right way to invest. It's not a smart decision at all. So for us to backtrack, say, hold on, it's a long-term game here. We don't know what next year is going to look like. And let's just not all of a sudden, hey, this year's been good, let's just hide everything and put it in the backyard. Right. That's not the answer either. Yeah,
it seems like there's a difference between being prepared with knowledge and then making decisions based on fear or scenarios that may or may not even play out.
Exactly.
And it may even look the same on paper with your decisions, but really it's kind of the struggle going on in a person's mind. Again, I talked about kind of that initial meeting. If people are out there on the fence, want help, maybe get started, what would that first meeting look like, and what would be some things that you'd talk about?
I think it's just, for us, it's a conversation. It's just sitting down, trying to understand your situation, how we can really help you is the biggest thing. And I'll be honest, if we can't, but hopefully there's areas or things that we see. And it's not just to try to figure out, hey, we can help you with your portfolio. It's bigger things. It is really helping you navigate these turbulent times and volatility. Like, let us do that. Let us take on those burdens. We sit down, we have a conversation. Here's what we do, and there's no cost to you to do it. And I hopefully that we can add or provide some sort of value to you and your family to help you, whether it's investing, whether it's estate planning, whether it's working with your CPA. All those things are all incorporated into our planning and into our meetings.
Absolutely. Sounds good, Tim. Well, are you ready to begin building a purposeful retirement plan that will best steward your time, your talent, and your treasure? If so, we can help. We have a number of ways you can set up a no-cost, no-obligation meeting. First, give us a call at 320-222-4236. Request a meeting online at tachesfinancial.com. And like I said, if you're in West Central Minnesota and are in the neighborhood, stop by our office. We're located on 19th Avenue Southwest in Willmar. We're open Monday through Friday, 8:30 to 4:30. I'm Jared Sebesta, joining you on this episode of Time, Talent, Treasure Radio. Thanks for listening. We'll see you next time.
Securities offered through Avantax Investment Services. Member FINRA SIPC. Investment advisory services offered through Avantax Advisory Services. Insurance services offered through an Avantax affiliated insurance agency.